This is the Asia Trade. I'm Avril Hong in Singapore.
And I'm Annabelle, Droulers in Hong Kong. The top stories this hour. Asian stocks set for gains with confirmation of a Trump-Xi meeting next week, lifting risk sentiment. Treasuries fall and oil prices spike ahead of delayed US inflation data. China's Communist Party plenum wraps up, putting tech self-reliance front and centre while dimming prospects for near-term economic stimulus. Also ahead, Intel shares jump in late trade as an upbeat forecast signals progress on its comeback plan. And we dig into Australia's rare earth deal with the US, speaking live to ASM CEO Rowena Smith.
And Bell, certainly rare earths will be in the spotlight amid that Trump-Xi meeting. But now that we have the confirmation, a date at least, that gathering is going to be taking place next week, that's actually what helped stocks to recover in the U.S. But we also had the U.S. sanctions on Russian energy majors causing that spike in oil prices. And for now, the question seems to be what that means for inflation. Traders choosing to be cautious, and that meant that you saw Treasury snapping a 3-day rally. Of course, we are also going to be watching how it plays out on US CPI data that is set to come later today. For the moment also, we are seeing gold reverse, even though it actually recovered from that 2-day steep sell-off. Bell?
Yeah, that's right, above the 4,100 mark. But also, you mentioned that US inflation data. Certainly, we might see a knee-jerk reaction, but investors may look past it in the session today as well, given that you've got lots of different positive factors. You mentioned some of those signs of easing tensions between the US and China, and positive earnings as well, because Intel was very much front and center, as we said. Asia stocks are looking for some gains here at the open. You can see it across the board. Going to be watching as well the Chinese yuan quite closely. But speaking of the currency space, let's also take a look at the Korean won. Because yesterday in the session, it's actually dropped to its lowest level we've seen going back 6 months. There's also a slide in equities, but essentially the story here is that the Bank of Korea left its interest rates unchanged, so the key rate at 2.5% again, and has also tempered any hopes around to easing expectations for the rest of this year, Avril.
Yeah, for the moment, let's talk about that meeting between Trump and Xi, because the White House has confirmed that the U.S. president will meet with his Chinese counterpart, Xi Jinping, next Thursday on the sidelines of the APEC Summit as the leaders look to de-escalate a simmering trade war. Let's bring in our China correspondent, Min Lo, in Shanghai for us. So, Min, there's been so much attention. Will they or won't they? Now we have the White House confirming it's a date. But what do we know beyond that?
Yeah, I guess certainly quite a bit of relief coming through that this is finally going to happen after so much of a guessing game over the past few days. But there's a lot at stake, right? The list of things on the agenda is very long, from geopolitical flare-ups like the Ukraine war and Taiwan to things like tariffs, rare earths, the threat of more software export controls from the US, soybean purchase commitments, fentanyl, for example. So President Trump has said it's going to be a pretty long meeting, but he is setting up he's setting a pretty positive tone so far, saying that everybody is likely going to come out very happy after this meeting. But I've been speaking to investors here. Honestly, many people have been telling me they're expecting the meeting to happen as a baseline scenario. They are expecting possibly an extension of the trade truce, because that expires on November 10, after which tariffs could ratchet up once again unless a truce or an extension is reached. But not many people are really expecting a big sweeping deal, and perhaps this could be just a meeting for them to continue the dialogue. President Trump did say that dialogue directly with President Xi is the best way to resolve their litany of issues. Could be an agreement to continue to speak further down the road, but we'll see. Certainly there is a lot to discuss. Whether or not we get that breakthrough, I think that's hard to say at this point.
Yeah, and rare earth controls or export controls have impacts on a range of different areas or countries, jurisdictions. What are we hearing about the EU response, or what they're said to be mulling as well?
Yeah, so the EU summit is taking place in Brussels, and we are hearing from sources that Emmanuel Macron has been telling his EU counterparts that the EU should be using their strongest trade tool yet to deal with China's rare earth export controls. And that tool is the anti-coercion tool. It was a legal tool that was created back during Trump's first term in power to counter any coercion from other countries. It gives them the legal tool through a majority vote of the EU countries to implement measures such as trade measures, financial measures, limiting access to EU's funding or public procurement, for example. But of course, if the EU does take these measures, it really represents a big escalation of trade tensions with China, and it could be a critical juncture where China would be then facing a multi-pronged trade war with both the US and the EU. And as you can see on this chart, China clearly dominates the rare earth supply chain. It has tremendous implication, as you said, Belle, on everything from EV batteries to consumer electronics to even chips production, because they are needed in these ultraviolet lithography machines as well. So the EU trade chief has said that they cannot accept the current situation, but they do not want to escalate, and still they're hoping to find a diplomatic solutions. But if not, we know the EU is preparing a series of trade measures by the end of the month to increase their negotiating leverage.
And Min Min, I guess on China's stance to kind of mitigate these vulnerabilities, potentially, it's really about building up its technological self-sufficiency. And these were among the takeaways from the China plenum. What else stood out to you?
Yeah, definitely. There are two big key priorities that we're taking away from the plenum. One of it is tech self-sufficiency. China wants to be a powerhouse, not just in AI and chips, but also in aviation, transportation, internet. So continuing to lean heavily on these so-called new quality productive forces. Potentially, this could be an issue of contention again, with the US accusing China of over-relying on these advanced manufacturing sector and exports for growth. But that's one bucket, the tech self-reliance. But the other bucket is consumption. It was mentioned 4 times in the plenum communique, which is more than the one time it was mentioned 4 years ago in 2020. So I think consumption for the next 5 years is a key focus for the government. They will want to shift or increase the share of consumption, which was about 40% of GDP last year. In terms of how they would do it, they're striking a little bit of a cautious tone when it comes to public spending on basic welfare, saying the government will do that within its means. Another sort of thing to note as well is the absentee rate at this time's plenum, about 37 of them absent. That is the highest level since the years of the Cultural Revolution. And it shows you that President Xi's anti-corruption probe is still pretty widespread and very sweeping at this point.
Yeah, but that dual circulation model, certainly the big focus on the consumption side. Let's also move from Min Min there. That was our China correspondent Min Min Law, and get a deeper look into the other main focus that Min Min mentioned, which was China's goal of enhancing tech self-reliance. Let's get to our Bloomberg Geoeconomics tech analyst Michael Dung joining us from Washington. So, Michael, this has been a long-standing push from China's government. It's not new, this push around tech self-reliancy, but how exactly do you see them faring in this endeavour as well, and how far along are they in that path as well to being self-sufficient?
Yeah, so this is absolutely a huge issue for the Chinese technological ecosystem and their own supply chain. I would say at this stage, they're making considerable progress, but they still face some major challenges. I mean, chief among them, which I'm sure you're aware of, is the lithography choke point dominated by ASML that Min Min also mentioned earlier. That choke point is perhaps the most technically complex one, but there's also a variety of challenges across the entire supply chain in different kinds of equipment, even down to materials. So if China really wants to protect its technological ambitions and sort of insulate itself from U.S. export controls moving forward, it needs to make a whole semiconductor ecosystem change.
Yeah, I mean, you raise a good point, right? Especially when it comes to lithography as well. Talk to us about that very ecosystem in China and perhaps the interplay that we're seeing among some of the private firms domestically as well.
Yeah, I do think there's a lot of momentum across many of these semiconductor supply chain nodes for many of the top tool suppliers as well. Lithography is the most difficult and perhaps it's the most challenging, and there China is making progress. But there's a lot more potential, for example, among some of the Chinese tool makers in etch and deposition, even potentially in metrology. The incredibly unique thing about the Chinese ecosystem is that I think it's the only semiconductor ecosystem worldwide where they have a viable competitor at essentially every stage of the semiconductor supply chain. There's varying degrees of how close they are to the state of the art in the West, but in every aspect, they're all making progress.
It's easy to think that this is obviously how US export controls have backfired, because the more that you restrict China, the more that they're also pushed to then build out their own ecosystem. Do you think that this would have happened regardless of rising tensions between the US and China?
Yes, I do think China was making a push for technological self-independence well before any of these export controls went into place. I mean, if you recall, the first wave of the big fund semiconductor ecosystem was in the investment fund was in the mid-2010s. So this was something they'd been working on for a while. Made in China 2025 also preceded the export controls. So they've definitely been working on this for a long time. I also don't think, though, that like U.S. export controls certainly accelerated Chinese progress in the sense that, you know, previously Chinese companies still had an option in terms of resorting to U.S. suppliers. Now, if that is completely turned away, they really can only turn to that Chinese ecosystem. So it's really accelerated that progress. And the last thing I'll say, though, is U.S. export controls certainly have inflicted significant damage on Chinese technological progress. If you look at Huawei alone and sort of the workarounds they've had to resort to for some of their most advanced chips. So there's damage on both ends, and I think China's making as much progress as possible to try to work around it.
Michael, it's also not just about U.S. dominance in some of these sectors when it comes to Chinese rivalry. I think you have also raised, for example, when it comes to photoresist, that is an area that Japan has dominance in. How does that affect what China is trying to do? And it's also interesting because all this is coming ahead of the U.S. and Japan leaders meeting next week.
Yes, 100%. And the really interesting thing, the trend that we're seeing now is ultimately the Western semiconductor supply chain is a multilateral ecosystem. The U.S. is a prominent player, but it's not the only one, right? And photoresist is a unique aspect that Japan itself dominates. We already mentioned the Netherlands for lithography earlier. So we've seen a movement towards more multilateral sort of controls or in terms of policy towards China with the recent Australia critical minerals deal, and that's something we hadn't seen for most of this year. So if this does, this does predict a wider multilateral sort of coordination, which is something the Trump administration has sort of abandoned for the start of this year, it could add even more pressure on the Chinese supply chain outside of nodes that U.S. controls directly.
Yeah, and I think we often quote it that semiconductor can travel more than 50,000 kilometres from start to finish in that production cycle, just showing how interconnected the supply chains are. But that was our Bloomberg Economics Geoeconomics Tech analyst, Michael Dung, there. And stay with us because we're going to be getting a lot more details on China's semiconductor ecosystem in the next edition of Bloomberg Tech Asia, looking at the hype that we've seen around the semiconductor story in China and whether that matches the reality of what we're seeing on the ground. So that's coming up in the next hour, Avril.
Yeah, coming up this hour on the Asia trade as well, we have Lombard, Odier joining us next to dive into corporate earnings season. We'll discuss the economic impact of China's new 5-year plan with Fidelity International. And in the next hour, we'll ask the CEO of Australian Strategic Materials about the rare earths deal with the US. Much more ahead. This is Bloomberg. Intel shares posting big gains after the bell as the chipmaker gave an upbeat forecast, boosting optimism around its comeback bid. Let's get more with Mandeep Singh, Global Head of Tech Research at Bloomberg Intelligence. Really good to have you in the Singapore studio, Mandeep. Yeah. So we are seeing Intel shares after already soaring. It's getting cash pouring in. It had a high earnings bar to clear, and it managed to clear it. So this tells us more about its comeback bid. What do you make of the progress?
Yeah, look, the positive data points that they share were more around the PC market. So if you look at their guide for 2025, 2026, they're talking about 290 million PCs. That's a pretty high number when you compare to where the PC market was over the last couple of years. And they seem to be very optimistic about AI PCs. So clearly, this is the segment where Intel has dominated over the years. And, even though the server market is still pretty kind of small for them when you compare to NVIDIA and what NVIDIA is doing on the data center side. But NVIDIA did invest some money in Intel. So that collaborative aspect could help Intel. And that's what it sounded like on the earnings call, because they kept talking about how even, traditional CPUs are getting refreshed now because of all the AI data center build out.
I was going to ask you, I mean, the money that NVIDIA and SoftBank channeling towards Intel, how is Intel going to perhaps use that?
I mean, they were under pressure for a while because of the cash burn in their foundry segment. And even in this quarter, the foundry segment didn't do much. But the hope is with Intel and all these alliances, there will be some manufacturing in the U.S. when it comes to leading node chips. And that's where Intel Foundry would benefit. And look, I mean, right now it's burning cash. It's clearly something they want to fix. But I think with all these alliances and PCs stabilizing, gross margins actually had quite a nice lift this quarter. So all signs are, things seem to be stabilizing for Intel and the trajectory is up.
And it's also interesting because it did highlight that it might be able to repay all the debt due next year. But the question still remains, will Intel be able to make products that customers want? Because that's been the struggle.
Yeah, and if they're giving a guide for 290 million PCs, annually, Intel is still the dominant player when it comes to PCs. Yes, you've got Apple and other players, but Intel by far dominates. And they talked about, older PCs being in demand. So it wasn't really AI PCs that drove the, beat this quarter. But clearly, everyone is looking to upgrade their PCs because of all the AI functionality that is getting rolled out.
Yeah, and all this coming against the backdrop of the U.S. taking a stake in them as well. Mandeep, great to chat. Thank you so much. Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. Belle?
Yeah, let's bring in Homin Lee now, Senior Macro Strategist at Lombard Odier as well, because I think Intel sort of underscores the theme that we've seen consistently across the US earnings expectation, which is doing pretty well. And certainly the expectations were very high going into US earnings that they had to deliver these companies.
Indeed, the tone of the earnings season has been pretty positive. We had some fragile stories, like last week, the regional banks having some issues, but overall tone has been quite positive, and now with the Intel and delivering, you can maybe see the echo of this for the other tech companies. Now there is an undercurrent of maybe a front loading in the product cycle. We'll have to see which is the greater contributing factor, because PC is considered more of a conventional, traditional business for some of these names, and you can imagine the memory chip makers also maybe benefiting from this in Asia. But also, we also have to note that the legacy memory nodes have been kind of a contributing factor for South Korean memory makers and the other names in Asia. So we'll have to see, how much of a contributing factor this has been. But overall, a significant beat on sales and earnings, and this echoes the upside surprise in real GDP trackers so far. And that will certainly keep the investors in a relatively positive mood.
Yeah, and when you combine it with obviously some progress or signs of de-escalation in the US-China trade relationship, do you think that sets us up then pretty well into year-end?
So first of all, you need a bit of conviction when whether or not we'll get a deal in about 7 days' time. And we've been thinking that because the complete collapse of the bilateral trade talks will be extremely painful for both sides, we still assume that there will be some sort of a ceasefire persisting into the end of the year and early next year. And if that's the case, even if we have a bit of disruption in the third and fourth quarter due to any residual payback from transshipment and the front loading, we'll likely get the positive market sentiment continuing into the end of the year and early next year. And this is the reason why we still maintain a bit of a risk tilt in our portfolios.
What's also been painful has been the U.S. government shutdown, and today it's also in the spotlight because of the US CPI data that is due, and the questions around the quality of the data because of the shutdown. How much volatility are you expecting around the data point?
Well, first of all, the stakes for September CPI is pretty high because markets have been waiting for it, and we do think we'll get the sign of tariff-related spike in the inflation. But at the same time, market participants have been anticipating this for quite some time. So our view here is that we're not going to get a disruptive reading that suggests that the trajectory for US CPI will be much higher than what the market participants are thinking. Our view is that maybe core PCE inflation peaks around low 3% by the end of the year and early 2026 before it starts converging to 2% target. Now, for the data quality issues, it's very unique. Government is still shut down. It might affect data collection for the October CPI, and that could certainly, as you said, create a bit of volatility around the quality of the data, because we'll have to see. We had similar experiences before, but given the very strong push for the Trump administration, maybe this remains as a concern for market participants in the next few weeks.
Okay, ahead of all this, in the next couple of minutes, we're going to be getting Japan CPI data. We have a BOJ decision next week. There's still some repricing to Takaichi's plans. What are you expecting in the potential moves upwards on dollar-yen and how that might influence BOJ policy?
So as far as the inflation data is concerned, there are some conflicting factors here. They do have political discussions of maybe delivering additional cost of living relief for households as we go forward as a result of the new leader Takaichi's campaign pledges and promises to voters. So that's going to again be a key issue that we need to watch for Japan inflation. But the bottom line is domestic economy is consistent with above target inflation and positive growth. That certainly sets up for provides a pretty nice context for BOJ to consider additional rate hikes. Our view is that January is still the likely window for BOJ's next hike because, first of all, BOJ has concerns about the JGB market volatility. There is a need to reprice for any sort of supplementary budget that might be passed before the end of the year. So before these risks are resolved, it's difficult to imagine that BOJ will be super aggressive. But they certainly seem to be keeping the door open for potential adjustment, especially if the dollar-yen start testing 155. So that's the key level that we need to watch for the currency in our view.
Yeah, but below that right now, of course, maybe giving them a little bit of breathing room. Homin, thanks so much for joining us this morning. That was Homin Lee, the senior macro strategist at Lombard Odier, and we'll have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade, and we're nearly 30 minutes into the session now for Aussie stocks. Energy ones are actually leading the benchmark higher today. Now, the story around energy does relate to what's happening in oil overall, because you've got oil now actually set for its biggest weekly advance since June of this year. We have come off straight 3 weeks of losses, but we just had some sanctions from the US on major Russian producers. That's very much upending the market, raising this prospect for supply disruptions. And playing into that story, as we said, energy stocks leading the gains for the ASX 200 on this Friday morning. More ahead. This is Bloomberg.
We are waiting out for Japan's CPI numbers that are due momentarily. We are getting these core CPI numbers for the month of September in Japan, rising 2.9%. This is bang in line with the estimate. We are seeing overall the headline CPI numbers also rising 2.9%, similarly in line with estimates. But of course, the one that we are watching the most closely is core, which is the number excluding fresh food and energy that has risen 3%. So this is coming in a bit softer than the consensus estimate. That being said, this is still well above the BOJ's 2% inflation target. We, of course, have the central bank meeting next week, not expected to move. Markets still also digesting Takaichi's policies. The Japanese leader will be meeting with the US president. But of course, the big meeting that we will be watching out for next week is that between Trump and Xi. So let's talk a bit more now on the confirmation that President Trump will meet his Chinese counterpart, Xi Jinping, next Thursday on the sidelines of the APEC Summit. Bloomberg's chief North Asia correspondent Stephen Engel explains what's at stake and the potential stumbling blocks.
After more than 6 years, Presidents Trump and Xi plan to meet face-to-face in South Korea at a time of significant economic friction between the world's two largest economies. While their respective teams have held direct trade talks, the opportunity for Xi and Trump to hammer out at least some of their differences in person could be the catalyst towards more stable ties. Or not. For sure, the leverage game is in full swing. Earlier this month, Beijing announced a new round of export controls on rare earth minerals, vital inputs for a range of high-value industries, including advanced electronics and military systems, adding intensified uncertainty for global manufacturers, not just in the U.S., but Europe as well.
Most countries know this is not particularly targeted on them. It is mainly a retaliation to the U.S. moves on China. So if these countries, they handle relations with China, especially trade and economic relations with China well, without assisting the U.S. in sanctioning China, in pursuing the export control of China, I think, they don't have to worry about this.
Now, while the Europeans weigh their response, Trump is threatening to hike tariffs on China to 155% from November 1st.
But China's been very rough with us over the years.
The U.S., citing national security, has implemented its own export controls, restricting China's access to high-end semiconductors and the equipment to make them, particularly those used for artificial intelligence. The result? An accelerated push by both nations for greater self-sufficiency and/or an increased reliance on or through other key trading partners, from critical components to strategic crops. China's buying the bulk of its soybean imports this year from South America instead of the U.S. And Trump has now struck a deal with Australia for rare earth. Underlying these economic issues are the geopolitical risks in the Asia-Pacific. Potential heightened military activity, particularly around Taiwan, would no doubt disrupt shipping lanes and supply chains.
I think when we finish our meetings in South Korea, China and I will have a really fair and really great trade deal together. I want to be good to China. I love my relationship with President Xi.
China's position on handling China-U.S. economic and trade issues has been consistent and clear. Trade wars and tariff wars have no winners and are not in the interest of either party. Both sides should resolve relevant issues through consultations based on equality, mutual respect, and mutual benefit.
For global business, the primary expectation for this on-again, off-again Trump-Xi meeting is less about finding a single comprehensive deal between the two countries, but more as an opportunity to seek at least a step towards de-escalation. Stephen Engel, Bloomberg News, Shanghai.
And of course, ahead of that all-important meeting between the U.S. and Chinese leaders next week, this week did get the wrap-up of China's plenum just a day ago. And China's push for tech self-reliance was the dominant theme out of this Communist Party plenum. While we await details about the next 5-year plan that seems to be a bit scarce at the moment, the emphasis on boosting consumption that some in the financial market seem to expect more of, that does not seem to have been as forthcoming. Let's get some analysis with Peiqian Liu, Asia economist at Fidelity International. Peiqian, good to see you.
Good to see you too.
So first off, your thoughts on what came out of the Chinese plenum, that consumption push didn't come in as strongly as some maybe had expected.
Yeah, thank you for the question. I think the plenum concluded with a communique, so we don't get the full picture yet. But scratching from the surface, it points to largely a continuation of what their plan has been for the last 5 years, which primarily is about tech self-sufficiency and it's about maintaining the manufacturing dominance within the global landscape. So those came as the top 2 priorities for the communique. And expanding domestic market, of course, pointing to more consumption, is also on the list of priorities, but it's ranked 3rd currently.
Do you think it needs to be more aggressive then in expanding that? Because we did hear from the likes of Stephen Roche just a day ago that there is more urgency on that for the Chinese economy than in the past. How much do you think should be done for consumption as a portion of GDP?
I think with regarding to this question, it's probably useful to bring the context of dual circulation. If we think about China's long-term goal of expanding and establishing a dual circulation model, the past 5 years was probably more about leaning on the external circulation, which they have been formulating. So as evident today, exports has been one of the major drivers of GDP growth. But we all know that's perhaps not sustainable, especially given the complexity of external environment. So in the next 5 years, I would envision them, it's actually alluding to as well in a communique that they will start expanding the domestic market. So building up this domestic circulation is perhaps a pivot and recalibrating within the grand scheme of the dual circulation model.
But dual circulation and lifting consumption, Peiqian, has been a long-standing effort from the company, or government rather, as well, and we've seen lots of different mentions of this. How do they actually go about doing it in reality, and what can you actually feasibly do to lift consumption when you've got the big sort of elephant, which is property prices, still in the doldrums?
Yeah, that's exactly right. The economy is currently strong and weak at the same time. So when we talk about consumption, it's perhaps from both cyclical and structural lens. From a cyclical perspective, we are in the view that consumption does need a lot more support. So that's also baked in our expectation for next year in 2026, where the government will likely to roll out more support towards domestic consumption. But from the structural perspective, I think the communique from the plenum has also been emphasizing that keeping a reasonable range of manufacturing share to GDP is also one of the priorities. So structurally, I think expanding domestic market will perhaps be put on the lens of expansion of growth altogether, so growing the pie rather than redistributing the pie in the next 5 years.
Then it sounds like it's going to come more from the fiscal side rather than the monetary policy. Of course, rates are already quite low and they're sort of constrained on that front. What would be the steps that you would expect then?
I still think fiscal will likely to lift the heavy weight, especially from the central government. So in 2026, will likely to be a continuation, if not slightly more expansionary policy stance towards social welfare, towards household consumption. So a little bit more transfer from the central government to the household will likely to be helpful for the rebalancing. As you mentioned, that monetary policies perhaps having slightly less room. Nonetheless, I still think that monetary policy will tilt towards easing, so gradual ease of benchmark rates and RRR cards are also still on the cards.
It's really about how much stimulus they can provide in the face of U.S. pressure. So I wonder, what is your base case and best case for the Trump-Xi meeting next week as their U.S.-China economic relationship shapes up?
That's right. I think the U.S.-China relation, or just at large, the external environment, is part of the reaction function as well, given how important export has been contributing to GDP growth. So given that context, the base case expectation for U.S.-China meeting coming up is perhaps no further escalation from here. And to move a little bit more to the optimistic scenario, I think a walk back from the recent escalations will likely to be helpful and beneficial for China's continued exports prowess.
Peiqian, thanks so much for joining us. That was Peiqian Lu, the Asia Pacific or Asia economist rather at Fidelity International. And some other stories that we're following this morning. Well, the European Union has put off a decision on whether to tap frozen Russian central bank assets to aid Ukraine. Talks among bloc members stalled. That's after Belgium demanded greater assurances that it wouldn't be held liable for risks linked to the proposed loans, which are mostly held in Brussels. Sources tell Bloomberg the goal is still to get a final agreement on the loans by year end.
We had a good discussion on the reparations loan to be financed with immobilized Russian assets, and it allowed us to identify points we still need to clarify. And then, indeed, we will come back with the different options that we will develop. Let me underline again, we will always respect European and international law while we are taking this work forward that we've just described.
Ukrainian President Volodymyr Zelensky says he won't recognize any territorial swaps during potential peace negotiations with Russia. That's as he doubles down on Kyiv's fight for its sovereignty. Zelensky's comments come after his recent meeting with President Trump, who's been pushing both sides to agree to some kind of territory swap. We'll have more ahead on the Asia trade. This is Bloomberg. Taking a look at what's happening across assets this morning. So recapping what happened in the US market. So we saw US stocks rising. We saw Treasury snapping a three-day rally. So yields again rising across the curve. Oil prices edged lower. We saw gold as well, fairly steady. And then the dollar, little change. But oil, of course, a big focus in the session, given you've got these US sanctions on Russian crude. In terms of the other dynamics, where you saw perhaps a de-escalation, some of the tensions between the US and China, a meeting is confirmed between Presidents Trump and Xi to take place at the APEC Summit. And then you also had the corporate earnings front. Intel, for instance, giving a forecast that does signal a comeback is underway. So sort of we've had most of the tech earnings so far, or earnings in aggregate in the US, sort of brushing off some of these earlier concerns we'd seen from the regional lenders around credit risks as well. But on that point of credit risks, actually the KKR co-founder Henry Kravis has pushed back against the warnings that the collapse of Tricolor Holdings and First Brands in the US could herald wider troubles in the private credit market. He told Bloomberg's Francine Lacroix why he's not worried about systemic risk.
Last week was quite a week. We had Jamie Dimon talking about cockroaches in certain private credit companies.
They don't invest.
They don't invest, but do you worry about something systemically wrong with private credit?
So let me tell you about private credit.
No.
Just recently, okay, we have a big private credit business at KKR. So do many other firms have private credit. Even banks have a sleeve of private credit. Everybody's talking about, oh my God, private credit's going to go bad. I do worry about one thing. I worry about those firms that don't have a driver's license, that have decided they want to get into private credit, have no way to drive, haven't passed a test or anything. And yeah, will they have problems? They could. I don't find it systemic. We don't take deposits. This is just really what it is. It's private credit. 2 big bankruptcies last 10 days. Not one penny of private credit was in them. But the market hit all of us that are in private credit because they assumed that was it. And then finally, once they figured out, well, this is really all banks, it was UBS and Jefferies were the 2 big banks that were the big lenders in that. I am not worried about a systemic risk issue in private credit.
The other question is it the banks or the private credit firms that suffer the most when we reach peak correction?
Depends. The thing you have to focus on if you're going to be in the credit business, what are my risks?
Right.
How am I protecting my investors, or how am I protecting my portfolio? And if you don't think about that, and you're only trying to knock the ball out of the park on every investment you make, you're going to have trouble.
KKR co-founder Henry Kravis speaking with our colleague Francine Lacroix at the Berlin Global Dialogue. Now to more from the corporate front. Binance co-founder Changpeng Zhao has received a pardon from President Trump. Trump told reporters that he pardoned Zhao at the request of a lot of good people, though he has never met him. The move marks the latest act of clemency the White House has granted to a crypto entrepreneur, underscoring how the Trump administration has positioned itself as a friend of the industry. Bloomberg has learned that banks are preparing to launch a record $38 billion debt offering to help fund data centers tied to Oracle. Our sources say JP Morgan and MUFG are leading the effort, which is split across two senior secured credit facilities. A $23 billion package is said to be aimed at financing a data center in Texas, while the other facility will help fund a project in Wisconsin. Anthropic has confirmed its cloud partnership with Alphabet's Google following Bloomberg's report earlier this week. Google will supply up to 1 million of its specialized AI chips to Anthropic in a transaction valued at tens of billions of dollars. The arrangement boosts the AI startup's computing capacity while reinforcing Google's role as a major investor and key infrastructure provider. Belle?
Yeah, and let's get to the FBI now because it's arrested NBA player Terry Rozier and coach Chauncey Billups in what prosecutors allege are two separate criminal schemes tied to illegal sports betting. At least 30 people were taken into custody across 11 states.
Let's not, mince words. This is the insider trading saga for the NBA. If you're participating in the legal gambling industry, you got nothing to worry about. If you're participating in illegal conduct, you got everything to worry about, and this case shows it.
They had every opportunity to let him self-surrender. It's not a constitutional right, but it's a very typical courtesy when you've been dealing with the defense attorney for a while. Instead, they wanted to have a little arrest, a little perp walk, a little support of their press conference up in New York, and it was completely avoidable.
For more, let's bring in Bloomberg senior reporter Miles Miller. So, Miles, how do the alleged schemes actually work?
Yeah, so let's start with the scheme that involved the poker game. So prosecutors say it was basically a high-tech update of an old mob racket. At first glance, the games look legitimate, private, high-stakes poker tables in Manhattan, in Miami, Las Vegas, even in the Hamptons. But on those machines, on the table, the standard deck mate shufflers that shuffle the cards had been rewired. They could scan every card in the deck, and there was a laptop across town that was reading real time what cards were being dealt. We knew that from there, the operator called the driver had relayed that data back to the player sitting at the table. And so where does the NBA names come in? Well, Chauncey Billups, who is a coach of the Portland Trail Blazers, and former player Damon Jones were the draw. The reason that people showed up, and prosecutors said that they were paid from the proceeds of those games that were fixed from the start. This is kind of crazy. You put a card down on the table, that table was X-ray, and there was a camera that showed you exactly what card was put down on the table. Now let's talk about the scheme that was involving the NBA. It's talking about insider trading in the NBA. Say a player wasn't feeling well. Well, how do people know that? That's not always public information. Or, a player is about to limp. That kind of information was being fed real time to people who were making bets against players. In the instance that you're talking about with Rozier, he told a friend that he was going to sit out part of the game. He played only 9 minutes. His friend placed several bets against him not being in the game for a long time, made $200,000. And guess what he did just right after that? The next morning, went to his house, and they were sharing in the winnings together. That's what brought this whole case together.
Miles, all this is pretty wild, and I think you've just really outlined how intricate the scheme has been, allegedly. What are prosecutors saying? Because there's some sense that this is unprecedented.
Yeah, it's unprecedented in two realms, right? You've got the NBA, which just started its season, which is very well involved in the sports betting, right? The sports books. And you would think that there'd be integrity in sports betting. But when you have a player alleged to have been basically throwing a game or basically altering a game so that he could make money off of it, that's a big problem. It started with a player from the Toronto Raptors, and that case was done in Brooklyn. And then when they started investigating it, they said, oh, we're peeling this onion back, and there's so much there. Then you've got the scheme with the former and current players at the poker games. This involved the 5 mafia families in New York, 4 of the 5 of them. This is the first time that any of these mafia families have worked together to make money. 2 families were running 2 of the games here in New York City, and then the other 2 families were providing loans against them. The commissioner here, the police commissioner, said it was extraordinary and really a rare sign of just how much money was at stake. One person who was part of the game told federal investigators he was thrilled to see this NBA player at the game, and so he gave his money. And guess what? He lost it because the house was always going to win.
Miles, this is really quite something. Thank you for bringing us the latest on this. Bloomberg senior national reporter Miles Miller for us. We have more ahead on the Asia trade. This is Bloomberg. Well, checking some of the stocks to watch when trade opens in Korea and Japan shortly. We will be keeping tabs on the suppliers of Intel, other chip makers as well, as the U.S. company's upbeat forecast boosts optimism around its comeback bid. And of course, we're seeing Intel shares rallying in after hours, Belle.
Yeah, certainly a really big vote of confidence for Lip-Bu Tan and the measures that he's taking, again, to build up Intel's business and restore it to prominence in the US ecosystem. But let's take a look broad markets, because Intel's figures are certainly going to be playing in. The other factor to watch, of course, is any signs of, well, the signs we're getting of some de-escalation in the US-China relationship. We do have that meeting now confirmed for Presidents Trump and Xi to meet next Thursday on the sidelines of the APEC Summit. So lots of coverage from Korea next week, but we'll have more ahead. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens. And Belle, a couple of tailwinds for the markets, including that confirmation of a Trump-Xi meeting next week. And then when you look at earnings, even Intel's comeback bid looking to be increasingly successful.
Yeah, that's right. And you saw that really playing out in the session, because a huge jump for Intel in late trade. It's going to be a big bearing, or having a big bearing, on the tech space in Asia in the session today. Also, of course, watching out for US CPI data that is due later Friday as well.
Yeah, for the moment, let's take a look at what we're seeing in Japan's markets. We did get Japan CPI as well. And in terms of the core number, coming in a bit softer than the consensus estimate when you exclude fresh food and energy, but still well above the BOJ's 2% inflation target. We are, of course, digesting that along with what's to come from Takaichi's policies. And maybe we're seeing a bit further repricing in JGBs in that regard. Don't forget, we also have the BOJ meeting next week, along with the Fed. Dollar yen is moving even, well, sideways for the moment, but the Japanese currency does look pretty weak. You are seeing that recovery in Japanese stocks for the moment. Maybe a bit of that coming through from the tech bounce overnight. Let's take a look as well at what we're seeing in Korea. It was interesting yesterday. We did see the local currency falling to a 6-month low along with stocks, and against the backdrop of the BOK voicing some caution, tempering market expectations of a November cut, but investors still seem to be betting on a cut from the BOK in the medium term. 1436 is where you're seeing dollar Korea won, and we are also seeing South Korean stocks moving higher for the moment. Belle?
Yeah, also taking a look at how Brent crude just starting the trading day, because we are just seeing it fairly steady so far, but it was a pretty big spike in the overnight session as well, especially for WTI, and that's after we had the US putting sanctions on certain Russian oil companies. So that fed back into inflation concerns, which also had a bearing on what we saw in the Treasury space as well, because we saw a 3-day rally in Treasuries being snapped, yields rising across the curve. The dollar as well, fairly steady in the session. We also saw a very slight retreat in gold, but that's what you're seeing across assets there. And again, that story around stocks, well, it was the gains for the S&P off those de-escalation of trade tensions, that confirmed meeting with Presidents Trump and Xi, plus the Intel earnings as well.
Yeah, Belle, for more on the market action, let's bring in Bloomberg M-Life strategist Mark Cranfield. So, Mark, there's no lack of things to digest. We had Japan CPI numbers. We're waiting out for the US CPI ones. And all this coming ahead of the Fed and BOJ meets next week. What is your take on where things go from here?
Well, you haven't even mentioned Trump and Xi meeting as well, which we hope they will meet. They will not be cancelled. That's a very big deal for financial markets. Yeah, as Bill was saying, the tailwinds are good for markets. This CPI report that comes out from the US tonight is a little bit isolated because we've been lacking data from America. Most of it has been cancelled over the past few weeks because of the government shutdown. So we're going to get this one piece of data. No doubt there'll be knee-jerk reactions, whatever it is, whether it's high or low. But the Fed will have difficulty in making too much of it because it is just one thing, and they've been missing a lot of the other reports, GDPs and employment data and that kind of thing. And they've been very focused on the jobs numbers. Now, there's a jobless claims report we're expecting to see, but it's also backdated. The indications from that will probably be that the employment situation is still fairly soft. And that's really what the Fed is more interested in, along with the possibility of stopping their reductions in the balance sheet. Now, the Fed balance sheet became very big. It's a hot topic of conversation, whether or not it's time for them to stop reducing it and effectively help the situation in America. It's another form of easing. If they do that, it's not as good as an interest rate cut, but along with an interest rate cut, it works very nicely, and it would mean that investors will be pretty happy. That may be announced next week.
You mentioned the Trump-Xi meeting and how important it is for investors. What does it mean for the yuan? Because we just had the plenum as well wrapping up. This prospect for any sort of near-term stimulus is dimmed. That's probably a negative for the yuan. And you can add the fixing as well. And we're consistently being anchored around that 710 level.
The plenum and the 5-year plan itself doesn't tell you a great deal about the currency. However, where the PBOC will be starting to get concerned is the exchange rates in relation to the yen and the Korean won. Now, they're big trading competitors for China, and those currencies have been weakening pretty fast against the Chinese currency. Now, there will be a certain point at which we've been seeing very steady fixings from the PBOC every day. The daily fixing has been implying that the yuan should stay on a strong path. There will be a limit to how far the Chinese central bank is willing to do that if the yen and the yuan go to even weaker territory, because those cross rates are very important. They're getting close to levels that the PBOC, the alarm bells will be going off in their headquarters pretty soon, unless Korea and Japan do something to stop the slide in their currency. If they don't, the response may come from China. We will see it through the daily fixing. Suddenly, they will step back and they will allow the fixed dollar yuan fixing to go higher, and that will be an indication that they are worried about what's happening in relation to other Asian currencies. We're not there yet, but you can see it's pretty much on their radar because those cross rates are close to very key levels for the Central Bank of China.
Also on the radar, I guess, when you look at this interplay of currencies, is how the weakness and the yen and the Korean won comes. These are countries that have investment pledges as part of their trade deals with the US. I mean, is that just another layer of complication when it comes to the FX moves?
Definitely, if they don't make it clear about how they're going to come up with that money. So there are many ways they could do it. If it's just pure foreign exchange transactions, that's a concern for the market, because that is just outright buying of US dollars, and it will just make the current situation even worse. They could do swaps. That will be a neutral effect on the market. They could raise the money via debt and do off-market swaps with the Federal Reserve. There are many ways of massaging it and doing it in a way that doesn't really impact the foreign exchange market. But if they need to make that clear to investors. At the moment, they're in a bit of a vacuum. They're not really sure. They've seen these big numbers, 350 billion or more, and they're getting a little bit worried because they're assuming that the central banks, they're just going to go straight in the market and buy the fresh US dollars. And that's partly why you're seeing the currency moves in that direction. It's also related to central bank policy as well. So it would help a lot if the authorities in Japan and Korea made it clear to investors how they're going to go about financing it and making sure it's a relatively neutral impact on the currency markets.
That was our MLive strategist there, Mark Cranfield. And let's get back to what we were mentioning about China, because the White House has confirmed that President Trump will meet Chinese President Xi Jinping next Thursday on the sidelines of the APEC Summit. That's as the leaders look to de-escalate a simmering trade war. Let's bring in our China correspondent, Min Lo. So, Min, what exactly are we expecting out of this meeting, and what would be sort of realistic, I guess, in terms of the takeaways?
Yeah, it's going to be the first in-person meeting for the two leaders since 2019 during Trump's first term in power. So it's highly anticipated. Many people are going to be watching for the outcomes of this. There are many things on the agenda, from China's soybean purchase from the US, as well as tariff issues, fentanyl, and then there are the geopolitical flashpoints like Taiwan, the Ukraine war. So a lot of things to get through. President Trump said it's going to be a long meeting. He seems to be very optimistic, saying that everybody's going to come out very happy out of this. But the investors that I've been speaking to are not as optimistic. Many believe that maybe we might see an extension of the trade truce or an agreement to continue dialogue further down the road, but not necessarily a sweeping breakthrough when it comes to a broad deal. But we'll have to see. We know that the US has threatened more curbs, for example, on US software or engine parts if a deal cannot be reached, especially when it comes to rare earth export controls. But again, it's hard to say what would happen in a week's time, so we'll be closely watching that.
And certainly China using rare earths as leverage amid the rivalry. But we also just wrapped up with the China plenum. What were your takeaways from that, particularly when it comes to technology?
Yes, tech self-sufficiency is definitely top of the priority for China. The communique put very high up China's industrial policy. Usually where it is in the communique, if it's lower or near the bottom of the article, it shows you the priority is lower, but tech is way up at the top. And it shows you that China is very concerned about this tech race, and it wants to really capture the commanding heights of science and tech. It wants to be a powerhouse, not just in AI and chips, but also in transportation, internet, and aviation as well. And the communique indicated that China will double down on advanced manufacturing as the backbone. Currently, manufacturing is already the biggest contributor to GDP, about 25%. And I can imagine this is something that other countries will once again take issue with. The US has been accusing China of over-relying on its manufacturing and exports as a driver of growth. But the other big takeaway is consumption. That seems to be an increased focus in this year's plenum. So for the next 5 years, China really want to boost consumption. How they will do that is not that clear, because anti-involution was not really mentioned in the article, and some analysts are saying that maybe the language there is still not strong enough to show China's determination to break that deflationary streak. But we'll have to see. There's some talk about improving people's livelihoods as well, although the tone there is a little bit cautious. China saying it will do what is within its means to try to spend when it comes to basic public welfare programs.
Min, thank you so much. Bloomberg China correspondent Min Lo for us. Now, when it comes to the US-China rivalry, certainly tech is front and center. We are since hearing that the Trump administration is actually pushing regulators to drastically accelerate the process of allowing the data center sector that, of course, has been booming to connect to power grids. And this would be a sort of game changer. And, of course, this is according to documents that have been reviewed by Bloomberg News, because this is a process, as we know it, that can drag on for years. So if these reviews come through, that could actually limit the process to about 60 days. Definitely these faster approvals, that would be a major boon for President Trump's AI ambitions. We'll continue tracking that story as it develops. We have more ahead on the Asia trade. This is Bloomberg. We're looking ahead to next week's high-stakes meeting between President Trump and China's Xi Jinping. Rare earths are front and center in the trade tensions, with China using its current dominance in the supply chain as a bargaining chip. Just this week, the US and Australia signed a critical minerals deal aimed at dulling China's edge. Australian Strategic Materials is one of the country's largest producers of these key elements used in clean energy, defense, and advanced manufacturing. Joining us now is ASM's Managing Director and CEO, Rowena Smith. Rowena, it's great to have you with us, especially in these times. Talk to us first, if you can, about what we're seeing from China, because it is restricting not just supply of rare earths, but also the technology that goes into this. Does that make things trickier, more difficult for a player such as yourself that's looking to perhaps do things more outside of the Chinese supply chain?
Well, you're right. China has been imposing restrictions progressively now, pretty much since Liberation Day earlier this year. And that is very disruptive to the established supply chain because it's so heavily concentrated in China at the moment. What it really means for ASM, though, is opportunity, because we've been anticipating and preparing for this moment for many years. And really our offering is an alternative to that existing supply chain. The market's been quite slow in moving away from that established supply chain to alternatives like ASM in prior years, but we've really seen the urgency of that shift in recent months and just continuing to crescendo as the restrictions become more severe. The restrictions themselves are firstly on the intermediate products, so the oxides, particularly the heavy rare earth oxides, which are essential for making the high-performance magnets that are needed in so many of the advanced and clean technologies, as well as defence applications. But then, as you say, more recently they have started to put restrictions on the technologies, on the components, so spare parts, components that contain these magnets, so that is going to have a much broader impact on the manufacturing and consumable goods for the Western world.
What about for your operations specifically? Because from what we understand, some of your raw materials for your South Korea plant come from China. I mean, come November 8th, does this make things a bit trickier for business as usual? What are you seeing?
So we've been developing for some time now alternative sources of raw materials with the emerging Western producers, and we've also been working with the emerging Western magnet producers in Asia, in the US and in Europe. And what we are also working on is our own technologies. So we're able, with our established capability in our plant in South Korea, to make the rare earth metals and alloys that are the immediate precursor for those emerging Western magnet producers. So for us, in the short term, this is an opportunity for us because it's creating urgency for the market to start utilising the offering that we have in partnership with the established Western oxide producers and magnet producers. There's no doubt that it will be complicated for this alternate supply chain to ramp up rapidly, but we have the advantage of already being established. So for us, this is a bonus.
So then you're talking sort of, or alluding there to that sort of supply chain integration. What are the benefits of integration from a cost perspective, and where do you sit as well in that cost curve?
So one of the things that is important to understand, that there's a difference between the cost curve and the price curve, because when pricing is only able to be defined by one concentrated supplier, then it's difficult. It's not a market price per se. So what we are really working at with this to develop this alternative integrated supply chain is working with producers of oxides and of magnets on either side of our facility to establish what is a fair pricing based on our cost base. But our cost base is very competitive. The truth is that, you know, the Western producers are not high cost producers. We've got high grade ores in, you know, Australia, for example, very high grade. We've got established facilities that work very efficiently. We have got great technology in our facility in Korea. We make great quality product. We can do that very efficiently. And similarly, I think the magnet producers have been operating now for some time to develop their technologies and their efficiencies. So whilst these are going to come at a higher price than the heavily discounted offerings that we're seeing out of China, these are not high cost products, and particularly not high cost components in the final products. When you look at what the cost of the rare earth materials are in an EV, you know, we're talking, you know, a couple of dollars of a car that might be $10,000, $20,000, $30,000 market. So, you know, these are not large expenses and the price is not prohibitive.
Yeah, thanks for giving that context. And let's talk about the technology that's also used for making these materials, because it's not just China looking at export concerns or export controls on its rare earth supplies. It's also looking at maybe putting curbs on the equipment that is used as well in the manufacturing process. So how do you see that affecting ASM?
So I'm sure this is going to affect some of our peers, but again, we've got the advantage of being an early starter. So we built our plant in 2022. We've been delivering customer products since that time, and we have been working with all these various different emerging producers, and we are now ready to ramp up. This, you know, I said at the beginning, ASM's been preparing for this moment. We've been anticipating it, and that includes we've been developing our own technologies, our own local equipment providers. You know, so we're well advanced in having independence from China for being able to maintain our offering. So, you know, we're excited about, you know, this opportunity. We've just been to market in recent months and raised $80 million Australian capital in order to be able to support expansion. And, you know, we are working carefully through at the moment how we will source some of the expanded equipment within some of these technology constraints. But we've definitely got an advantage with the fact that we've been thinking about it and working towards this moment for some time.
Also working towards what we've seen between the US and Australia in agreeing on critical minerals that deal there. Are you having conversations with the Trump administration? Are there hopes for perhaps funding in later phases?
Yeah, so we've got a facility that already exists there in Korea, which, as I said, we've been operating since 22. But what we have been in conversation in the States now for well over 12 months is replicating that facility in the States. We've been talking with the Department of War about funding support for that facility in the States. We have been working, we initially 12 months ago shortlisted 6 states. We've been working through the due diligence and we will identify our preferred state later this year. The states are providing significant incentives for us to replicate this capability domestically. It will be an enabler of the ecosystem in the States because it will be a bridgeway for the emerging oxide producers into the market, because you can't just make oxide, you have to be able to metallize it and alloy it before it can go to the magnet producers. But similarly, it will be an enabler for the ecosystem of aspiring magnet producers in the US. So the government's been very keen, very supportive of us, and we're well advanced in those discussions. But the announcement this week with the Australian government in partnership is going to be, again, a great enabler for us, because the Australian and US governments are really looking at how can we build this supply chain across these jurisdictions in partnership. And, you know, that really enables us with our resource that we've got in Dubbo, which is construction ready, fully permitted. It has both these light and heavy rare earth oxides that we can add into this supply chain. We can now get funding support for that. We've already got US a letter of support for $600 million US towards the construction of that facility, and also the Australian government has given us a letter of support for $200 million. So we've already got very strong government support, but this enables us now to really talk turkey, so to speak, about that support for that American metals facility, so we have that direct supply chain from Australia into the US.
Rowena, fantastic insights. That was Rowena Smith there, Australian Strategic Materials Managing Director and CEO. Now, an advisor to China's central bank says Beijing needs to take major steps to stabilise the property market to begin turning around weak economic indicators. Speaking to us at the Bund Summit in Shanghai, Huang Yiping said uncertainty around the Trump trade war is also hurting China's business outlook.
Well, I think on the one hand, when you mentioned about the tariffs, we don't really have a number yet, but what happened during the last 6 months really damaged the confidence of the enterprises. Like the numbers ranges from probably 145 to somewhere like 30–40%, and then mentioned 100%. I think for the businesses, this basically means policy uncertainty. You don't know what is going to happen, and that I think is affecting negatively your investment, your employment, and also show in manufacturing PMI numbers. So I think we don't yet have an agreement, but the uncertainty is very, very damaging to macroeconomy.
It hasn't necessarily been reflected in the latest quarterly GDP results. Why is that? And,
well, the third quarter GDP numbers might already reflect some of it. But the second quarter number is quite clear. GDP numbers are still 5.2%. And you look at, for instance, production, exports, consumption, they're resilient. And that's why GDP numbers are okay. But if you look at another set of numbers, the inflation rate, which was very sluggish. You look at the PMI, which was below 50, and private sector investment, and also the migrant workers' unemployment rate. These numbers, to me, all suggest that the confidence level is low, and the businesses just don't know what is going to happen.
You contributed to an article in September about needing more fiscal support for the housing market.
Yeah.
I assume you still believe that. So what kind of shorter-term policy stimulus would you recommend?
What we really need is for the government, including the central bank, to do something major to repair the balance sheet of household, of the enterprises, of the local governments, and maybe also of the financial institutions. They need to be recapitalized in order to expand their lending businesses.
So what would that major step be? I mean, recapitalization of the banks, and what else? How do you recapitalize the households if they're holding on to those savings?
For the household, I think the key thing is if we can try to do something to stabilize the property market, that will take us a big step forward. But also for the local government, I think we need to be aggressive in easing the fiscal policy, but really trying to provide more money for the local government to spend. At the moment, the central government is like expanding by these special government bonds, long-term government bonds, and so on. A lot of them requires important conditions for the local government to use it. So the pace of dispatchment of this money is not very rapid.
PBOC advisor Huang Yiping speaking to Bloomberg's Stephen Engel. Let's take a quick look at how some of these movers in the session are doing. SoftBank, Samsung, among the stocks we're watching, they have agreed on an AI-RAN collaboration. And of course, even as we watch these tech stocks, our tech show is coming up just ahead. Keep it here with us for the next edition of Bloomberg Tech Asia. This is Bloomberg.